People think losing a home happens loudly. Foreclosure signs, moving trucks, court papers taped to doors. But the next wave won't look like that. It will look normal. Quiet streets, lights still on, lawn still trimmed. And yet, millions of Americans will no longer truly own their homes. Not because they missed payments, not because of a market crash, but because they can't insure them. That sounds impossible, almost boring, until you realize what insurance actually is. Insurance isn't protection. It's permission. Permission to have a mortgage. Permission for a bank to lend. Permission for a home to legally exist inside the modern economy. And by 2026, that permission is quietly being revoked. At first, the signs seem unrelated. A letter from an insurance company in Florida. Coverage dropped. No explanation. A renewal notice in California. Premium doubled. Deductible tripled. A wildfire map in the West. A flood map in the South. A hail map in the Midwest. Different places. Different disasters. Same outcome. Insurance companies are leaving. Not because they want to. Because the math stopped working. For decades, insurers relied on a simple idea. Risk could be spread. One storm here. One fire there. Losses balanced by calm years elsewhere. That balance is gone. Now the storms stack. The fires repeat. The floods return to the same neighborhoods. Year after year. Sometimes month after month. Payouts explode. Reserves drain. And quietly, insurers make a choice. They don't announce it on the news. They don't call it a crisis. They just stop writing policies. Or they price them so high they may as well not exist. Homeowners think this is just another bill going up. Something annoying. Temporary. So they wait. They shop around. And at first, there's hope. State-backed insurance pools. Last resort coverage. Government programs stepping in. It feels like the system is adapting. But this is where the story turns. Because those programs were never designed for scale. They were meant to cover a few edge cases. A few risky zones. Not entire counties. Not entire states. As more private insurers exit, everyone floods into the same lifeboat. Premiums spike again. Coverage shrinks. And then come the exclusions. Floods not covered. Fire only partially covered. Wind damage capped. Mold excluded. Your home is insured. Except for the things most likely to destroy it. Still, people tell themselves it's fine. Until the bank calls. Because mortgages don't care about hope. Every mortgage contract has a clause. A quiet one. Continuous insurance coverage is mandatory. No insurance means the bank steps in. Force-placed insurance. It's worse. Much worse. Higher cost. Less coverage. Added directly to your monthly payment. Suddenly, homeowners who never missed a payment can't afford their mortgage anymore. Not because prices crashed. Because insurance broke the deal. This is the silent freeze. Homes don't flood the market. They just stop moving. Buyers can't get insured. Loans don't get approved. Sellers sit. Prices stagnate. Then slip. Not everywhere at once. Just enough to confuse people. Experts argue. Commentators disagree. But beneath the noise, the mechanism is simple. No insurance. No mortgage. No sale. And by 2026, this won't be limited to coastal or fire-prone areas. Climate risk is expanding. Reclassified. Redrawn. Yesterday's safe zone becomes tomorrow's exclusion. And here's the part no one likes to say out loud. Insurance companies don't need to be wrong. They just need to believe the risk is unmanageable. Their job isn't to protect communities. It's to protect balance sheets. So they pull back. Methodically. Legally. And homeowners are left holding an asset they can't fully use. A house they can live in. But not leverage. Not refinance. Not sell easily. Ownership redefined. Not an investment. Not mobility. Just shelter. For some, that's acceptable. For millions of others, it's devastating. Because the American housing system was built on one assumption. That risk could always be insured. Remove that assumption, and the entire structure changes shape. This isn't a crash with a single date. No headlines. No panic. Just a slow realization that in the modern U.S., owning a home doesn't mean what it used to mean. And the question isn't whether this will happen. It's already happening. The real question is how many people will notice. Before the word uninsurable quietly replaces the word home,